Oil prices have fallen by as much as 30%, the steepest drop in almost 30 years, a crisis described as having no equal in oil market history. The market turmoil began when Saudi Arabia, the world's largest oil exporter, started a price war by announcing plans to boost production. That followed Friday's meeting in Vienna by the Organisation of the Petroleum Exporting Countries, or OPEC. Russia refused to join the cartel's plan to reduce production, aimed at countering the decline in demand from China, usually the world's biggest energy consumer, but damaged by the coronavirus crisis.
The
Saudis are angry because other countries like Russia are unwilling to participate in oil production cuts. So they're saying, we will show you who the boss is. We can produce at much lower costs and you can't.
But the oil price slump could have widespread consequences beyond hitting already jittery markets. The International Monetary Fund suggests Saudi Arabia needs prices to be at about $80 a barrel to balance its budget. The price fall will also hurt major oil-producing nations Venezuela and Iran, already under pressure from US sanctions. A prolonged price collapse could mean they struggle to fund things like education and healthcare, especially vital during the global coronavirus outbreak.
Unless this spread of virus is controlled and contained, we will not see recovery in the capital markets because it has caused huge damage to the global economy.
America's shale oil industry could also be in trouble. It needs prices to be relatively high to make a profit. Many companies are heavily in debt and may not be able to make repayments, leading to job cuts.
This seems to be the kind of move that Russian leaders might have actually decided was in their interest, that low oil prices is not good for Russia's economy, but if it causes even more pain to the US economy, it might be something that they'd be interested in.
For consumers, though, it could mean less pain at the pump, with the price of petrol expected to fall. Alexi, Al Jazeera.